Hey folks, and how are you doing today? Now, welcome to this episode of The Next 12 Months, where we talk to industry experts and we get them to give us an idea and give us kind of their inside knowledge almost about what's going to happen in the industry over the next 12 months. And today, we are going to be talking about mortgages with Anne Evans. So, Anne, thank you very much for coming onto the podcast. Tell us a little bit about you and what you do to help people on a day-to-day basis.
Oh, hello, Gary. Thanks for asking me to join you. I'm a mortgage and protection advisor, and I love to help people get the keys to their home, whether it's first-time buyers or self-employed um, applicants. I know the market. I have access to the whole of the market, and I'm with the clients every step of the way, and I know which lenders to go to make the process a lot more efficient and easier to right the way through.
Nice. So before we get onto your kind of three key predictions for the next kind of 12 months, how's the last 12 months been for you?
The last 12 months have been incredibly busy. Like everybody, when the initial country went into lockdown, wasn't sure what was going to happen. A lot of lenders were pulling applications. 95% mortgages were being withdrawn. The few lenders that were still in the market were inundated with applications and eventually had to pull. We've got through that. We've got through stamp duty discounts, and the housing market last year has been a record high with annual price growth in double digits. You've had 400,000 more first-time buyers come onto the market because of the cheap deals, because of more savings, and this has prompted, the busiest year in a long time for the housing market.
So positive news for the last 12 months, well, towards the end of it.
Absolutely, it finished on a real high, and people were wondering, what's going to happen in the new year. Lots of talk about inflation and the economy, and it has started really well. It's the best start to a year in nearly 2 decades. House prices are continuing to grow at a rate, but obviously in the background now we're seeing base rate rises, and we've had the second continuous to 0.5% now. Predictions are that that will continue for the rest of 2022, and potentially may rise to 1.5% at the end of the year, but that will all depend on economic conditions in the background.
Okay, so we've kind of sneaked into the first prediction, really, haven't we? So just for the people who kind of missed that to start off with, what is your first prediction for the next 12 months? Remember, folks listening and watching, these aren't legally binding. So these are just ideas, these are just opinions, to give you an idea of where Anne thinks the market's going to go or what's going to be happening in 12 months. So please don't hold it to this, but it just gives you an idea. So Anne, what's your first prediction?
Well, thanks, Gary. From historically, 2-year fixed rates have always been a better option than 5-year, because even though 5-year is more stability, 2-year may be a bit cheaper. But now we're seeing that the 2-year rates are higher than the 5-year rates, which tells us that the market see that the rates are going to be going up in the next 2 years and possibly go back down within the 5-year period. So it is a good option if you're looking to fix for 5 years, because then you have that stability. And with the economy and the rate of inflation going up, that will normally affect base rate. And if base rate goes up, then you find that house prices normally come down as a norm. And that's why I think that I will see continual rates over the next few months, 12 months.
Yeah, gotcha. So if you're looking to kind of buy a house or sell a house at this point in time, what should we be looking at?
Well, you should check what the other house prices are in the area. Obviously, if there is a demand in your particular area, you might be viewing a property which is advertised at guide price. And you need to do your homework to see what prices have sold in the area and within the last 3 to 6 months. People tend to compete against the guide price and may consider going above it.
Yeah.
but valuers now I've seen are being very conservative, and they may value it below what you've purchased it for, and compare it with the market, what the guide price is. So this is something to be mindful of if you don't, if you are going for the 95% mortgage, and try not to go above the asking price if at all possible.
Oh, good advice. Good advice. So, what's your prediction number 2?
So, I've said that the base rates, the interest rates may creep up, or base rates, and that properties may stabilize because they have been on a continuous growth the last 12 months because the demand is there. But now, with the combination of inflation, base rate rises, historically house prices have flattened. So we may see that the continual rise may fall. And so just to be mindful and maybe make an offer if you think that they're overpricing them and they need to sell. Check how long they've been on the market for. And there's absolutely no harm in making an offer on a property. All the thing they can say is no. But yeah, because we are in that transitional period with house prices growing and maybe house prices flattening, it's a good opportunity to get make an offer on a property.
I like it. I like the idea, and this is why I love talking to people like you, because you live and breathe this every day. And for me, this has given me a glimpse into your world. But also, at the moment, I'm not looking to sell my house. I'm probably looking to sell it probably next year or the year after. But it does give me an idea that actually, if it's flattening down now in the next 12 months, over the next 12 months, after the 12 months, could it go? It's going to either stay the same, or go up, or go down. It's going to be one of those. But I know this year it's pretty much stable. Is that kind of what I'm hearing?
Yes, and when rates are going up, it's going to cost clients more money. But I always sort of say to them, as long as you can afford the repayments, don't worry too much about the rates going up a 0.25% or 0.5%. But as long as you have the ability to make the repayments, you have a roof over your head, it is an investment property. As long as you're not looking to sell it, in the next 2 years. And that's what my job is to make sure that you can afford it. And, if the worst happen, you can afford your mortgage. So don't try and stretch yourself. Consider all the bills, utilities, council tax, as well as your mortgage. And as long as you're comfortable with those repayments, then it's a good investment. It's only if you're looking to move in the next 2 years, and then it will always come back. We've always known that. We've lived through quite a few recessions, and they do come back. And I always prepare clients as well what to expect in the mortgage process. Get your decision in principle ready. Be prepared when the estate agents ask you for it, and then you have a good chance of being successful with your offer because they already know that you're halfway there.
Makes sense. So, Anne, what is your third and final prediction for the next 12 months?
Well, obviously, with rates going up, it's going to affect affordability for a lot of first-time buyers. And I think that the lenders will look at maybe reassessing their stress rates, because their stress rates are normally 3 or 4% higher than the fixed rate, because they need to know that you have the ability to meet the repayments if rates go up. But with rates not being that high for many years now, they may bring that stress rate down just to make it more affordable, because at the end of the day, they want to lend people money. They've already reduced the loan to income ratio since obviously the previous property crash. They are more, there is more affordability checks to be made. So I think they may just loosen the stress test a little bit in the future.
Cool. And for the people who don't know about stress tests and stress rates, just what are the kind of key principles around it? Because until I spoke to you, I didn't know anything about this, and I bought a house probably 5 years ago, around that kind of time. Can't remember them talking about it at all.
Well, when we key in the affordability details, you put your income, you put what the rate is at the moment, and then you put any outgoings that you've got, whether it's car loans, credit cards, and then it will tell you what you can afford. Now, in the background of that calculator, it will assume rates going up 2 or 3%.
Got you.
So not only can you afford the current rate, you can afford potentially it going up in the future. So I suppose they've learnt their lessons in the past with any rates increases, that it's obviously pushed people over the limit. But not only are you talking about mortgage rates going up, you're talking council tax, utility bills, food. So that's all got to be considered when we do our affordability calculators. So for a mortgage advisor, it can appear to be intrusive, the type of questions that we're asking, but we just want to make sure that with everything else that you've got on in the background, that you can afford this payment
Okay.
for,
Nice,
for the
simple.
future.
Yeah, nice, simple explanation. Thank you. So before we kind of recap and kind of finish it all off, if let's say you've already loaded so quite a few real golden top tips about getting everything prepared beforehand, doing your research, not being afraid to kind of ask for a lower price, all that stuff. But have you got any kind of top tips for people at the moment that we haven't covered that you just want to share with them?
Absolutely. So firstly, check your credit score. Something that people don't think to look at. They've got mobile phone contracts. They've got new phone insurance contracts. Anything that you've got going on with that requires credit. So check your go on the free credit scores, 30 days, whatever. Just check that your credit score is okay. If it needs attention, just check into that to see if you've got missed payments. They can really haunt people. Even if it's a small overdraft facility that you've not paid into for a while, it can affect your credit score. Then check your bank statements. Make sure that you've not had the odd missed payment, that you've forgot to transfer money in, or you've gone over your overdrawn balance. Just an oversight. These things can trip people up as well. And deposits, if you've got savings helped by ISA, we'll look for 3 months bank statements. They're very hot on the moment of the source of the deposit, whether it's been built up generically or whether you've had a lump sum paid into it. They need to know where that lump sum's come from. Gifted deposits, these are from family members. These are very popular. We not only do we need to see a gift letter to say that the money's been gifted, but we'll need to see their bank statements as well. So that's quite hot at the moment in terms of checking sources of deposits.
Nice, good. Again, it's dead simple. Top tips. So just to recap, what are your 3 top predictions for the next 12 months for your industry?
Like I said, Gary, in my opinion, and judging by what's been going on, I predict that the base rate will continue to rise for the next 12 months. House prices may sort of like slow down in terms of not only just in the value of them, but maybe the transactions as well, because people are more concentrating on their outgoings, and they may think getting to a bigger house may push them over the limits, that the numbers of houses being transacted may fall. And but the market, the government will do whatever they can to keep that house market as fluid as possible.
Nice. Well, have I missed 1 point, or was that all 3 points?
Well, the stress test was the third point. So just to reiterate, the government will do whatever they can to make it easier by improving on the stress rate for new first-time buyers.
ACEs. So you've heard it here, folks. Remember, these aren't legally binding. I've got to kind of say that again, just to make sure that you're all aware of it. But this gives you an idea of where we believe the path could go take us in this industry. So, if people want to find more information about you, connect on social media, websites, that kind of stuff, how can they? Where will they find you?
Well, I'm an independent mortgage advisor, fully qualified. I have my own website, it's anneevansmortgages.co.uk, and I am on LinkedIn, Anne Evans Mortgages, and also Facebook, Anne Evans Mortgages.
Aces. Well, thank you very much for your time today. And also thank you very much for everyone watching and listening. Remember, connect with Anne. She really knows her stuff. And if you want to find out more information about all of that stuff, check out our website, connect with her on social. So thank you very much for watching. Thank you very much, Anne, for spending your time today. I know you're incredibly busy, so I value your time so much. But again, viewers, listeners, thank you. Thank you. If you've liked this, please share it with someone else, especially if they are going through this and they wanted a few top tips about buying and selling their houses. But also, if you do like it, or if you don't, actually, leave a comment. Let us know. And if you do love it, subscribe to our channel. Thank you very much, everyone. And take care. And thank you very much for watching.
Thank you, Gary. Appreciate it.